Okay, we're back, folks, and I hope we have Bill Chapman of TrendReaction on the line. Bill, are you there?
Yeah, I'm here, Larry. Good morning. How are you today?
Good morning.
We've gotten to a point in this economy right now, and also within the market, that I want to do a little recap on what I've said previously. And this was from the February 28th presentation when I was on.
AM call, I had said, despite an overnight low of 30.59, none of my bottom indicators have come to life. What's interesting is that my crash indicators have started to signal. Pay attention here. Yesterday was a pay attention day, plus or minus 2 days. The crash indicators are signaling a market collapse between now and March 3 to 5th.
Yep.
The new forecast for a bottom in the ES is in or about 29.37 level. Below that, 27.11.
Okay, now that was on February 28th. And sure enough, I was absolutely too conservative in that run. This is the presentation from the 9th of April. We have, by my calculations from yesterday, we have 711 points on upside in this market. We've got to get through the level of 30.69. And if we can clear that, 34.11 is next.
That'd be a new high.
That's going to be a new high. And we're still trending higher. And we've seen the devaluation of the dollar. The dollar is now very cheap overseas. We're still flooding the markets with money. And a tremendous amount is coming over to seas right now because stocks are just they're on a fire sale compared to the other currencies.
Well, hey, stay with us, Bill. Okay, folks, we're back with Bill Chapman. You want to continue, Bill?
Yeah, absolutely. So this is when I was saying we were going to be headed. We were right in here in the marketplace when I was saying we were headed to 34.11. And we're currently at 33.51.28. We're in striking distance of that target. And we reevaluate it once we get beyond that 34.11 point. Let's see where we go from there. One of the things that I wanted to point out, you talk about the Fed, and the Fed has been given what? Congress has allocated $5.8 trillion to the Fed to use in order to overcome this economic downturn that we are in. And when you look at this face on this guy, I mean, this is the face of determination. And this is the face of a man who's determined not to have his legacy, the collapse of the American economy, under his watch. Out of the $5.8 trillion that they've spent so far, they've only used $2.2 trillion. So they have $3.6 trillion to go. And this guy is going to use it. What I thought was interesting was his last press conference, because he slipped. He slipped up, and he went and revealed what they're up to.
The last thing I'll say is that if the expansion, even if the reopening goes well, the
expansion. They're working on an expansionary policy within this economy, and they're going to throw as much of that capital that they have into the economy if anything turns down. So what I was interested in seeing, everyone's saying, okay, what has happened with the monetary base? Well, they've increased it by 52.7%. And within that, you had 12.6% went to currency in circulation. So that's money out there in M1, M2. But you had 117.2% of the money go into excess reserves of depository institutions. And you're wondering where inflation is? There isn't going to be any inflation because the banks are holding the majority of the money that the Fed has put out there. The other thing that has happened is that the velocity of M2 is down 24.6%. Everybody has stopped spending. You're seeing inflation on foods and on McDonald's, and yet at the same time, the broader indicators are showing that there's no inflation in the economy. This is the CPI, and the CPI has gone relatively flat. Of course, that's ex-food and energy. But the one thing that you're really seeing spikes in is food prices. So it's out there. Inflation is out there, but it's a shadow inflation that's running through the economy. Here you have your monetary base, the blue line, the excess reserves, the currency in circulation, and the velocity of money. And currently, the banks have all the cash. And it's when you see this drop dramatically and the banks start throwing this money into currency in circulation, that's when inflation is really going to take off. But for right now, they're holding it at bay. And if in terms of how much money they are actually holding, we started February with a monetary base of 3.01 trillion, and it's now $52 trillion. So we've gone from a minus 0.09 excess reserves to 117 trillion in excess reserves.
Mm-hmm.
So we've doubled the monetary base, but the question now is, what happens next? Where do we go from here? And it's a great question. You know, I've been looking at the skew and the VIX, and there's been a flattening in the skew recently, illustrating that no one is paying up for longer-term options. That's a lack of faith in the market going to climb any higher. And if the market continues this ascent, and the skew, which has already started to deviate, you get this dislocation, and the VIX begins to rise, be on the lookout for a market correction. The other thing that I've been looking at here is, where is the money flowing? You want to be aware of, the first money in and out of the market is the most speculative money. And one of the most speculative indices is biotech, because you never know whether a drug is going to be approved by the FDA or not. And once it is approved by the FDA, the drug company has to go into its costliest part of its life cycle, and that is ramp up production and hire the people and get the sales force together. And that's why you usually see these stocks, these drug stocks, like their brand new drug, cure for cancer, it pounds up 30, 40 points, and then in a week it's back down to where it started. Yeah, because they've got to take all the revenue that they're holding on the sidelines and go for a credit line in order to get this drug to market. The transports have still been rising, and this is the engine of the S&P. If the transports are going up, this is the fuel for the S&P to go even higher. But what is also striking is the utilities. Everybody's fleeing to safety. The water companies, the electric companies, etc. They'll always get paid. Plus, you can get a nice dividend out of them if you try hard enough.
So you don't see any correction coming for months?
No. This is the other now. I'm glad you mentioned that, because we are in a topping process here. As you see the biotechs having come in, that's the speculative money leaving the marketplace. Transport's still, it's a very fickle lady, transports. Mm-hmm. This could very easily turn itself right around. But this is what's striking the utilities, money moving into the utilities. Most conservative investments out there. So I use a roadmap based on the Delta phenomena, Wells Wilder and Jim Sloman. And what I'm looking at right now is the last blue year. The cycles are red, blue, yellow, and green. And
we got to take a break here, Bill. I'll be right back with you, okay? Bill Chapman, Trend Reaction. We'll be right back, folks. Okay, we're back with Bill Chapman. Bill, I have a question, and that is, we've only got about 2 minutes. Do you think you could wind it up and also, give a little promo for yourself?
Absolutely. my roadmap for this year is the industrials from 2012. We're currently just about peaking in the 2012 cycle, and we should be headed down further. What is interesting, what we're going to be heading into, of course, is the election. And you got a choice between two guys. There are some who say that we got a choice between a madman who conveniently forgets anything he's done wrong, or by appearances, a demented man who simply can't remember anything he's done wrong. So it's your choice. But what I really thought was interesting was this guy, Mike DeWine. I'd never seen anybody happier for getting tested positive for COVID-19. But you know that was all a ploy so that he didn't have to get his picture taken with President Trump. So I run a daily newsletter out called the AM Call. And you can find it on TrendReaction.com. And it's a daily trading forecast that my clients get an hour before the market opens. And with it, this is today's. And one of the things I noticed in the Wall Street Journal today is that the economy is slowing. And this is where you start to get the roll. And what I think is going to happen with this economy and with these markets is that it's just going to be a slow decline. It's not going to be one of these crashes that that everyone's expecting. Oh, market's going to collapse beyond belief. It's not going to happen that way. It's going to fall like a souffle, like the slow leak in your tire. I could be absolutely wrong, but that's the way I'm reading the tea leaves right now. So, please, you want to get a hold of me?
Okay. Oh, go ahead.
TrendReaction.com.
Thank you. Thanks, Bill. See you folks tomorrow.